stock that has been buzzing off late and tries to fish out the reasons and explain if the buzz is warranted. What stock do you have for us?
Well, Rima, the stock on our list today is Everest Kanto cylinders, because if you look at it in this month itself, the stock is run up almost 40%. This year in 2016, it's up 80%, and in the last 1 year, it's up almost 300%. It's a market cap of 340 crore, a loss-making company, but essentially what it does is it manufactures and produces industrial as well as CNG cylinders. What it does is it makes those cylinders that we use in our CNG cars or firefighting, fire extinguishers or something like that, even medical industry and beverages. It is India's largest player and enjoys a market share of almost 65%. It has been a loss-making company, but the operations have been improving. FY16, for instance, the revenue was up 7%. The EBITDA, on the other hand, was up 350%. But on the bottom line, the company did make a loss of 124 crores. In the first quarter, though, the operations remarkably improved, because if you look at it, the revenues were up 35% for the first quarter, and the EBITDA, on the EBITDA level, the company posted a gain of 8.3 crore versus a loss of 1.2 crores. And the net profit, or rather net loss, halved at 15 crore versus about 30 crores. Now, their revenues come from three big geographies. The first one is India, 35%, then 30% comes in from UAE, 25% from USA, and 10% from other countries in Europe as well. But if you look at each of the operations in the first quarter, the Indian business was the one which posted turnaround. So if you look at the India operations in the first quarter, the revenue was up 44%. The EBIT came in at a gain of almost 7 crore versus a loss. And FY16, the India business, remember, had an EBIT loss of 39 crore. So there was a turnaround in the Indian business, which accounts for almost 35% of their revenue. And going forward, there are a lot of triggers for the Indian business. The first one is lower gas prices, which have increased the demand for alternative fuel. At the same time, CNG cylinders requirement in northern parts of the country on account of the regulation that came by on pollution control. Remember, the Delhi government had notified that they will use or they will allow CNG vehicles. Other than that, the company is also looking to increase their role in the fire protection system, and with new fire protection norms coming by, it will help them. And they have an alliance with Firetrace USA, which makes fire equipment or fire extinguishing equipment, which will help the Indian defense company if the Make in India push were to have any sort of JV with this company. If you look at the US as well as Hungarian operations, the revenue was down 12% in the first quarter, and on the EBIT operational front as well, the EBIT came in with a loss of almost 3.3 crore versus 1.1 crore. However, the management has a sanguine outlook going forward in the US business, because they say that the order book has a larger proportion of high margin profits, so there is a turnaround expected. And recently they got the US Department of Transport's approval during the year, which will help them marketing and manufacturing more industrial and automotive cylinders going forward. So this is something that we'll keep an eye out on. And the segment which is growing a lot for them is the European operations, namely the German operations. Right now, the constitution of revenue coming in from Germany is quite less, but they have been developing clients. And if you look at it in FY16, while the revenue from Germany grew by 230%, in the first quarter, it actually grew by 8 times. And on an EBIT basis, they did make a profit. So these are things we'll be keeping an eye out on. And the segment that I did not speak about was the UAE segment. The company spoke about it, saying that it was under pressure or owing to the sanctions on Iran. However, with the sanctions being lifted, they expect that to do better as well. But there are a few concerns for the company. The first one, it has a very high finance cost. In fact, most of their operation, the losses come on account of finance costs. FY16 finance cost was close to 53 crores, but it has been coming down. So that's one thing we'll keep an eye out on. The company has total debt of almost 523 crore versus 554 crores, and the safeguard duty on imported steel has affected them, because that accounts for most of their raw material purchases. Going forward, the company has a capex lined up of 25% increase in their capacity. They currently have around 1.3 million cylinders, and they are also setting up plants using alternative technology and alternative raw materials. So these are things we need to keep an eye out on. But here's a caveat: this company is not a buy recommendation from my side, just a fact check on all the companies which have been buzzing.
A bit of a deep dive, Mangalam. Any marquee investors in it? I mean, over the last 1 year? Well-known individual investors, anybody in it?
Not that I know of, or not that has been reported in the exchanges.
All right, thanks very much, Mangalam. Very useful information. That is Everest Kanto cylinders, 31.3. It's done phenomenally well over the last year or so. That's all.